The flood crisis in Victoria, Tasmania and New South Wales escalates as businesses start downgrading earnings on the back of the weather. The Star hit with a $100 million fine and it loses its licence, sort of. And luxury car sales surge. It's Tuesday, the 18th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. You're staying dry?
Yes, but I tell you what, half the country isn't. This is quite extraordinary, the scale of this.
Some of the photos from the north of Victoria, it's just amazing to see this water just spreading across this dry land. Really, I mean, I don't know that certainly not in that part of the world, I don't think I've ever seen anything like it.
Yeah. And the fact that you can actually have flooding in areas where it's not actually raining at the moment because the water is just and the fact that in many cases people know the water is coming, and so it's just very ominous, isn't it?
Yeah, it sure is. I mean, I suppose it is better to know because you can prepare, but just the volume of water flowing down those rivers, I'm not sure that anyone can really fully prepare.
No. And look, we'll have a bit more of a chat in a moment about the economic impact of this as well. But I wanted to mention the interview that you've got coming up today because there's a really interesting chat with Brett Wickham, who is the local managing director of Spanish infrastructure giant Acciona Energía.
Yes, and Michael, it's a really interesting chat about the infrastructure needs as we transition to green energy. It goes for about 12 or 13 minutes, and the 12 or 13 minutes before we actually had a chat was me practicing saying Acciona Energía, because they're a very difficult name to pronounce.
It certainly is. And you know what? Maybe that's a good way to get people to listen.
That's right.
Have a listen and see how Sean goes with the pronunciation
of Acciona Energía. It's underselling Brett because it is a really fascinating chat about what Australia needs to do. And this is the really fundamental infrastructure. It's great to have renewables, but renewables don't tend to be anywhere near where the energy is needed. So you will need all those power lines to transmit it, and that's what it's all about. Really fascinating.
Yeah, and Brett knows it better than anybody because they are building what will be the largest wind farm in the Southern Hemisphere. So he knows this inside and out. So it is well worth sticking around for that one. But first, Sean, the main story this morning, all about the flood crisis, and it is really escalating right across large parts of the country, hitting people in their homes, their workplace, individual businesses, and on a bigger scale, the federal budget too.
That's right. Yesterday, Prime Minister Anthony Albanese and Victorian Premier Daniel Andrews were visiting flood-stricken areas, announcing aid packages. In Victoria, people whose homes have been profoundly damaged will receive more than $42,000 for uninsured properties. Around $165 million has been allocated for emergency road repairs. Apparently, there's an estimated 10,000 potholes across Victoria as a result of the rain. Don't know who counted them anyway. And another $150 million has been pledged to help with the cleanup. In Victoria, the SES has made at least 650 flood rescues. The floods, at least in the Shepparton area of Victoria, seem to have peaked, but in other regions, not so. Also, the outlook in New South Wales is a little bit more positive, but it's still a bit problematic in Tasmania.
And the wet weather, which at the moment, as you say, Sean, is focused on Victoria and Tasmania and New South Wales, is starting to show up now in earnings downgrades across a range of industries.
That's right. We're starting to see that on the ASX. So Building Materials Group Adbury said that its earnings have continued to be impacted by ongoing wet weather conditions affecting volume and cost, and an escalation of input and operational costs. Now, that sent its share price down 22% yesterday. Quite amazing. Agribusiness Costa Group said that adverse weather conditions, including higher rainfall and cooler temperatures, has hit the quality of fruit. So harvest volumes are in line with what Costa predicted, but the quality of the fruit across all regions is lower. That means there's more going out for export. It also costs more to produce fruit in these conditions because labour costs go up and spraying costs are suddenly introduced. Anyway, Costa's share price fell 13% yesterday on the back of that. Another was insurer Suncorp. It said it's received about 1,000 claims so far. The majority are in Victoria. Of course, they'll receive more. Investment bank Morgan Stanley came out yesterday. It said that La Nina presents a 5 to 10% production risk for some of the big miners. So Morgan Stanley reckons Whitehaven Coal, Evolution Mining, Newcrest, South32, BHP could all be hit by this weather event.
And Sean, there'll be a cost to the federal budget too, which isn't that far away now.
That's right. The Treasurer, Jim Chalmers, said he needed to discuss what relief measures will appear in next week's budget with Prime Minister Anthony Albanese. Mr Albanese said that Australians will need to be careful as floods will become more likely in the coming weeks and months as rivers and dams are already at capacity. More communities in Victoria, of course, were added to the flood relief packages yesterday. The Prime Minister also said the floodwater damage to agriculture will lead to even higher food prices. The damage will hurt agricultural supplies across wheat, fruit and vegetables and poultry, among other sectors. It really is bad news all round.
Yeah, sure is. How about local markets? What happened yesterday?
Talking about bad news, the S&P ASX 200 finished the day down 1.4% to 6,664 points, following a weak lead-in from Wall Street over the weekend. Energy and materials stocks led the market lower. Macquarie Group and QBE Insurance both fell 4%. Santos was off 3%. BHP, Woodside Energy, Transurban and South 32, they all fell 2%. Really the only two decent performers among the large caps, the only two to end up in positive territory, were ANZ and Goodman Group. There's plenty of corporate news around among some of the smaller companies. Energy Infrastructure APA Group said it's looking at buying electricity interconnector Basslink. Now, Basslink owns and operates the 370-kilometre high-voltage direct current electricity interconnector between Victoria and Tasmania. That'll cost about $773 million. Medibank confirmed that there's no evidence customer data was removed from its IT environment after it detected unusual activity last week in part of its network. And very sadly, IGO's Managing Director and Chief Executive, Peter Bradford, passed away suddenly on Saturday.
Yeah, that is sad news. Our condolences to his family. What about international markets, Sean?
Michael, I thought we'd focus on commodity prices this morning because there's a bit going on. Oil prices jumped over the past 24 hours, having dropped last week. Gold prices have dropped below $1,650 an ounce. That whole theory of gold as a safe haven ain't really working at the moment. Iron ore suffered after Chinese President Xi Jinping clung to the country's COVID zero tolerance policy. That policy will slow growth and that hurts purchases of iron ore. On the flip side, lithium prices jumped quite a bit yesterday, helping stocks in that sector. And finally, the Aussie dollar is trading above 62 US cents. Though it's hard to find anyone who thinks in the short term it's going any way but down.
All right, plenty happening. We'll be back in a moment with the rest of the day's business news. Sean, the New South Wales casino watchdog has suspended the Star Entertainment Group's Sydney casino licence and appointed a special manager, but the casino will remain open with all staff employed.
Well, yes, the Star's also been hit with a $100 million fine by the New South Wales Independent Casino Commission. The Commission will appoint Nicholas Weeks to the special manager position from Friday this week. What that means is that the Star's licence is suspended and the manager, Nicholas Weeks, will hold the licence until the Commission determines that the Star and its management team are fit to run operations. The Star entered a trading halt yesterday ahead of the announcement. Now, Commissioner Philip Crawford said he wants to protect the jobs of casino workers and wants the Star to regain its licence. Now, that decision, or his decision, only came mid-last month after interim chair Ben Heap wrote to the Commissioner apologising for the group's conduct. The point of that story is it just seems that it took quite a while for the Star to show remorse, at least to the Commissioner.
Sean, Health Minister Mark Butler has commissioned a report on the Health Department's existing compliance and audit programs following revelations billions of dollars are being rorted or wasted from Medicare each year.
A joint investigation by the Sydney Morning Herald and The Age and ABC's 7:30 has uncovered instances of doctors billing for dead patients and radiologists over-servicing cancer patients, which highlight flaws in the Medicare system that makes it easy to rort. Dr. Margaret Foe, the country's leading expert on Medicare, estimated the annual cost of Medicare's waste and rorts at about $8 billion. That's about 30% of the annual budget and more than the annual cost of running the Air Force. Mr. Butler said the overwhelming majority of Australia's medical professionals did the right thing, but it was important that every dollar in Medicare was spent directly on patient care.
Sean, we love a bit of speculation. There are some media reports around this morning that Westpac wants to buy Australian payment terminal business Tyro Payments.
Yeah, that's right. And Tyro's share price jumped 9% yesterday as a result. Mind you, it's down about 50% for the year. Now, the report suggests that National Australia Bank and Commonwealth Bank are also interested. What's interesting about this is that private equity tried to take over Tyro. And Tyro said, no, you didn't offer enough. They offered about $660 million. One of its major shareholders is Grok Ventures. Now, that's owned by Atlassian billionaire Mike Cannon-Brookes. He was interested in taking that bid. So, of course, the banks have said, okay, they've rejected that, but we know one of the major shareholders is interested in a bid of about that amount or a bit more. Hence, the banks have jumped in. You might actually know this organisation. You know, when you tap your card on one of those machines, you often see Tyro, the name on the machine. That's what it does.
Yes. Yeah, I've definitely seen it there. And well, look, if the media reports are correct and we've got Westpac, NAB and CBA all interested, this could be a very interesting time for Tyro Payments.
Sure could.
Sean, Australia's third largest company, CSL, says the iron deficiency division of the recently acquired Vifa Pharma is really the jewel in the crown.
That's right. Now, that deal last December cost CSL $11.7 billion US. It believes that one of the biggest opportunities for the iron deficiency business is the potential expansion into the US. Now, one of the drugs from Vifa is already widely used in Europe. A decision on it is expected from the Federal Drug Administration in the US by February. Vifa is expected to add somewhere between $300 and $330 million US to CSL's net profit this year. Away from Vifa, CEO Paul Perreault said the recovery in plasma collection volumes following COVID-19 could take some years. Of course, plasma collection is CSL's core product.
Insurance Australia has announced it will undertake an on-market share buyback of up to $350 million, funded by a reduction in its business interruption provision.
Yes, and that's the interesting part, where the money comes from. That business interruption provision was sitting there in case of adverse court rulings, but a decision by the High Court last Friday provides some certainty around what insurers will have to pay out around COVID. Hence, Insurance Australia think they can do a buyback. Now, other insurers, QBE and Suncorp, have also got hefty provisions that could go back to shareholders. In fact, the three have about $1 billion in provisions for lawsuits, potentially affecting thousands of businesses.
Endeavour Group says that sales are up more than 3% for the September quarter compared to a year earlier.
Yes, and it's all coming in hotel sales. So retail sales through Endeavour's bottle shops are down about 6%, but hotel sales are up 90%. We're all going back to the pub, Michael.
It would appear so.
The reason, of course, for the big jump in hotel sales is last year we were in a COVID lockdown, so we'll take that. But there's more evidence that we're all interested in going back to the pub. The chief executive of Endeavour Group, Steve Donoghue, expects it to continue because people are already booking Christmas parties. What is it, the 18th of October?
What, 75 or something? That's terrible maths in my head, but 70-something days out from Christmas. That's getting organised. If you're planning your Christmas party now, well done.
Yeah, absolutely. So Endeavour has capacity for 44,000 Christmas functions across its venues, and already 30% have been taken, which is about twice last year's level. Interesting.
Where are we having the Fear and Greed Christmas party, Sean?
Probably where we had the mid-year party. At Adam's house.
I was going to say, I was pretty sure that wasn't at a pub or anything, but
No. Maybe we'll try and find an Endeavour Group pub and go there.
All right, something to look forward to. Another to provide a quarterly update, Sean, was grocery wholesaler Metcash.
Yes, it said strong sales momentum has continued into this financial year, with sales up nearly 8% during the 23 weeks to October 9. While food sales and supermarket sales rose, the really big jumps came in hardware and liquor. It's a theme here, Michael, isn't there?
I'm starting to detect one, Sean.
Yes. Metcash said COVID-related costs have started to normalise and there's been some improvement in supply chain challenges. That is good news. However, finding staff remains a challenge.
How about this one then, Sean? Sales of luxury vehicles hit a record high last month. This is despite rising interest rates and falling house prices.
There were 12,603 vehicles sold in September. These are luxury vehicles. According to the CommSec Luxury Vehicles Index, more than double the level of a year ago. CommSec Chief Economist Craig James said it was unusual to see sales of luxury vehicles rising while house prices are falling, but the increased availability of supply was helping sales. By far, the most popular luxury vehicle last month was, Michael?
Does Tesla count?
Yes. Nearly 6,000 units shifted. There are also 27 Lamborghinis. I don't think that was you.
27. That's fantastic that you can almost kind of count them almost by name.
Yeah, exactly. There was about a record number of Porsches, actually, about 5,000 or 5,081 to be exact, and 61 Rolls Royces.
61 Rolls Royces, so nearly more than double the number of Lamborghinis.
Yeah, that's right. Also, sales of Aston Martins and Maseratis were at multi-year highs last month. There you go.
Look at us just chatting about kind of all these luxury cars as though this is something we
Normal
do every
stuff.
day. Just look at all these Rolls Royces cruising around. This is just aspirational stuff for us, really, isn't it?
Totally. There were two manufacturers who were notably below record levels. That was Lexus and Jaguar.
Oh, there you go. All right, moving on to overseas news. And Sean, Russia has hit Ukrainian capital Kiev with so-called kamikaze drones.
That's right. Drones damaged several residential houses and a fire broke out in a non-residential building. Yesterday's attack on Kiev marks the second strike in a week. The previous one was when Russia shelled Ukraine with missiles in the largest attack since it launched its full-scale invasion in February. It just doesn't look like that is slowing down much.
Now, Sean, as part of the pandemic, you hear a lot of references to long COVID, and there's a new large-scale study out that shows that long COVID can rob people of health, energy, employment, and joy, and also strip away the equivalent of a decade's worth of aerobic fitness.
Yes, this is a big study which was published in JAMA Network Open. It aggregated results from dozens of earlier experiments to show that people with long COVID typically have lower endurance capacity and find working out much harder. This is according to the Washington Post. The findings add to mounting evidence from both experiments and people's experiences that something is going on in many people who develop long COVID that makes exercise challenging, if not impossible. A study published last week indicates at least 1 in 20 people sickened with coronavirus will now develop long COVID. Typically, long COVID is diagnosed based on a constellation of symptoms that includes headaches, fatigue, brain fog, and joint pain.
All right, up next is the Fear and Greed Daily interview. And today, Sean, you're speaking with Brett Wickham.
That's right, all about energy transformation and all the infrastructure we need to make renewable energy go from its source, a wind farm, to a house like mine.
It's a fantastic chat. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 18th of October, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, Instagram, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.